Have you ever heard the saying, "It's not about how much you earn, but how much you can save"? I've always liked this saying, but I did wonder how far you can really stretch it until it gets to the point where you feel like you've got nothing left to give. Welcome to the first video of a two-part series on how 10 simple changes saved my family over $6,000 in a year. I made this video because I feel it's important to clear up the misconception that in order to save, you have to go without, reduce, or downgrade. None of the changes discussed resulted in any of this happening for my family and I. We still had very similar types of services and products that we knew and loved. We simply just changed certain aspects about them. Before we begin, please note that the information provided in this video is general information only and should not be taken as financial advice. My full disclaimer can be found in the description below. Okay, let's get started. Now, this change might yield a small reward compared to the effort of updating or changing your current bank account details or bank provider. However, you only have to do this once, and in my opinion, a saving is a saving, especially when you're paying for something that provides no additional benefit to you. All this took was for us to do a quick Google search on everyday bank account rates, fees, and charges for some different banking options. Once the choice was made, the application process was simple and we completed it online in minutes. Closing existing bank accounts was easy too. Why pay bank charges when there are so many banks that offer the same service for free? This change saved us $60 each for the year. I am in the habit of saving part of my income per fortnight. So instead of saving after receiving my pay, I decided to nominate a percentage of my wage to go into my superannuation fund through salary sacrificing. For tax purposes, this is also known as concessional contributions. This has many advantages. Here are a few. Instead of being taxed at the marginal tax rate set by the Australian Tax Office, the amount you salary sacrifice into superannuation is taxed at 15%. This is beneficial for anyone earning over the tax-free threshold, which at the time of recording this video is $18,200. The higher your tax bracket is, the more you will benefit. By putting extra money into your superannuation, you're basically saving even more money for your retirement via additional tax savings. Every superannuation fund is different, but ultimately, their aim is to invest your money and increase its value over time, which is important for increasing the security of your financial future. Out of sight, out of mind is a very true saying. Once set up, your salary sacrifice arrangement occurs automatically. After a few pays, you won't even miss it, making saving easier. Let's work out how much this saved us. Based on my yearly income, the highest marginal tax rate I pay is 32.5%. Adding the Medicare levy of 2% brings this figure to 34.5%, which is the figure I'll be using when referring to my marginal tax rate for the remainder of this video. My concessional contributions were set at $340.50 per fortnight. If this amount was taxed at my marginal tax rate, the tax I would pay on this amount would be $117.47 per fortnight. But because I've chosen to salary sacrifice this amount instead, it means I am now taxed at 15%, which equates to $51.07 per fortnight. As a result, I've saved $66.40 per fortnight on tax differences, which saved me $1,726.40 a year. There are certain conditions you need to be aware of when it comes to salary sacrificing into superannuation. This change might also not be an option for everyone, or at least at this particular point in time. So it's important to consider your personal circumstances and seek professional financial advice if you have any questions. You can find more information on the Australian Tax Office website or by contacting your superannuation fund. In addition, you should always seek professional financial advice if you need help with this. I think if you were to reflect on why you are a customer of certain service providers, you would find some of the reasons might be because a close friend or family member told me they were good, because they offered me the best rate at the time and I kind of just stuck with them, because I've been with them since I can remember, because I've never had any problems, why would I change? Because I'm comfortable with them, they're all I know. Don't get me wrong, these are all very valid reasons, but like most things, these very valid reasons become outdated over time. These days, more service providers offer competitive rates and equivalent services to the ones we currently pay higher rates for. Let me ask you, do you feel obligated to be a loyal customer to the brand if they are no longer providing you with the best option? I never thought about this until we made a conscious decision to review all the goods and services we paid for, and we realized we remained loyal to certain providers because that's all we knew. While spending some time researching other internet providers, I was amazed at how many other providers there were out there, providers equally reputable as the current one who offered a reduced rate for the same type of service. Our landline internet expenses were $95 per month. We found an equally reputable provider offering the same service for only $70 per month. So, this saved us $25 a month, which in a year saved us $300. Like the points we just went over regarding the landline and internet service providers, the same applies to many other services we consume. Mobile phone services is another one of those. My partner and I owned our mobile phones outright and were each on monthly plans for the service. Again, we never questioned whether there was something better out there and made the assumption that our service provider was the best fit for us. It's more reliable, more convenient, and so on and so on. When I finally challenged this thinking, I realized I had made many unsubstantiated assumptions over time. Not only did we find a new mobile phone provider, we also decided to go prepaid for the first time. We found a reliable provider where you can pay for the service a year up front, saving quite a substantial amount of money. We knew exactly how much we would be paying for the year and didn't have to hassle ourselves with monthly bills anymore. Since we switched to this, we have never had any problems or noticed any differences. We went from 2 lots of $59 amounts per month to our new prepaid plans costing us just $16 a month each. This means we saved $516 each a year. That's $1,032 a year for the both of us. How good is that? Credit card interest rates. If you already have a credit card, let me ask you 2 questions. Number 1, do you pay it on time? If so, great. Your risk of losing money is greatly reduced. If not, let me ask you question number 2. What is the interest rate charged on the outstanding balance? When you buy something using credit on your credit card, you have a specific time frame to pay that money back in full. This is known as an interest-free period. If you are late on making those payments, you are charged an interest rate on the remaining balance, which can sometimes be as much as 17% or higher. Therefore, it's important to take the time to understand what interest rate your credit card provider charges and what this translates to in terms of interest paid by you. Unpaid debt can quickly spiral out of control, not only making it hard for you to pay back, but also making it hard for you to save. For example, if you owed $5,000 on your credit card over a 5-year period of time and were charged 17% compound interest, by the end of the 5-year period, you would have paid $5,962 in interest. If you made no repayments to this amount over the 5-year period, your $5,000 debt would have ended up as $10,962. You can check how much interest your credit card provider charges by looking on their website, on your statement, or by calling them directly. A quick Google search on credit card interest rates will quickly give you an idea as to whether you're paying too much interest compared to other credit card providers. If you are, it might be worth considering transferring your current credit card debt to another bank or service provider who charges a lower interest rate. If you have multiple credit card debts, you could consolidate the higher ones with the credit card that charges lower interest rates. This in itself could lower your debt repayments dramatically. If you're signing up for a credit card for the first time, you might even find that the credit card provider offers long interest-free periods. So I encourage you to check it out because you don't know what you'll find and what you'll save as a result. Credit card rewards. In the past, my partner and I never really used our credit card. It was always something that was just there in case of an emergency. These days, there are so many credit card providers who offer various rewards that it made us take a closer look and consider whether there was something on offer that could benefit us. We came across a Woolworths credit card that offers a 10% discount per month on our online shopping, along with another 10% discount for one in-store shop per month. It also comes with a reward system. Reward points are accrued when you spend using the credit card, and these accrued points are then converted into a dollar value, which is then sent as a rewards card. The rewards card can then be used to pay for your shopping. We figured 2 lots of 10% discounts per month alone would already provide a huge benefit to us, all for just owning the credit card. We then considered that the rewards we would receive just by using a credit card to pay for our groceries and other expenses that we would have paid for anyway would also provide us with further savings. I want to make a point here. I'm not advocating for credit cards, and even more so if you can't afford to pay them back on time. So always consider your personal circumstances before considering this as an option for you. Another thing to note is that some purchases paid with a credit card can incur a surcharge, which is an additional amount charged by the vendor. This means you may be paying more than what your purchased product costs, so be sure you have assessed whether this is the best payment option for you at the time. Now, back to our savings. By changing our payment method for goods and services to our new credit card, we received approximately $480 in rewards, which we put towards our grocery shopping. By utilizing the 2 lots of 10% discount entitlements each month, we saved approximately $80 per month. That's $960 a year on groceries we would have bought anyway. You don't have to choose a card that only offers rewards on groceries. There are many other options out there. If you travel frequently, perhaps a credit card which gives you frequent flyer points might be a more appropriate option for you. Credit cards which offer rewards usually incur an annual fee, so consider if the reward outweighs the fee when making your choice. Many waive this fee for the first year for new customers. So again, do your research and see what the best option is for you. We have most definitely covered a lot of ground, so for today's video, I'm going to leave it there. To recap, we went through 5 of the 10 simple changes that saved my family and I over $6,000. In summary, these were switching to a bank account with no fees, saving a portion of income through salary sacrificing to benefit from a tax advantage, reviewing our internet provider, and reviewing our mobile phone provider. Last but not least, considering a credit card with rewards, and for some, considering a credit card with lower interest rates, or considering no credit card at all. In part 2, I'll cover the remaining 5 changes along with an additional perspective to consider about any savings you make and the implications this has on your savings goals. Just from the 5 changes discussed in today's video, we've already saved $4,618.40. You can do it too. If you liked today's video, Please give it a thumbs up and consider subscribing for more thought-provoking content. Until next time, happy saving!